Good morning, all. It's Joe Neighbour from Signal Centre giving you a crypto roundup today. I'm just going to talk through a couple of charts and give you an update on where we believe crypto markets could be headed in the short to medium term. First up, just a quick roundup of the latest headlines with regards to cryptocurrencies. They were subject to further selling yesterday. Sentiment was undermined by a wider risk erosion of risk appetite. We've seen money coming out of riskier assets like Bitcoin and stock indices as people look for safer haven assets. And Bitcoin did briefly decline below 30,000. It's currently trading below 30,000 now, as I come on the chart shortly. There was a further bout of selling overnight in the Asian markets, with Bitcoin sliding to a 4-week low. Ethereum was also subject to volatile trading and continued to hit selling pressure on the approach to the 2000 level. It was also subject to fresh selling overnight in the Asian session. So let's get stuck into some charts and see what's going on here. So first up, we've got the weekly chart on Bitcoin. Steve, my colleague, has been quite vocal about his opinion on Bitcoin with regards to forming a large top pattern. What I've got here on the weekly chart is the head and shoulders setup that Steve has been talking about. This is coming under threat. I've got a neckline drawn on my version of this at 28,732. So we have seen that low touched in recent weeks. This is a weekly chart we have here. We actually saw that on the 21st of June. And we're seeing a retest of this now. So what we have here is a very broad pattern. The left shoulder over here, the head up here, in the right shoulder forming around here. It's not, a great looking right shoulder. It's, fairly complex on the right hand side. So there is an argument as to whether or not there is any validity in this pattern, but it's all subjective when it comes to technical analysis, and it's all down to opinion. But I think the interesting thing here is if it does break this neckline, how us as technicians measure moves and where we believe price could go to on the downside is by taking a measurement of the head down to the proposed neckline and projecting it lower. In this instance, it actually comes in at minus 7,440, which obviously isn't going to happen. So I think we can maybe disregard that as a tactic when it comes to looking at Bitcoin. So what I'm going to do now is actually drill into the daily charts, because I think there's a bit more to be said about this. I was of the opinion that a top pattern actually formed back here between the period of sort of February to May. And the measured move of this pattern, so taking a move from the high to the low of the neckline, projecting it lower, came in at around about 29,121. And I was a buyer on that level back in June when it hit there into this sort of zone of support that I've got on my chart between the areas of 27,175 to 29,121. And we're back at that zone again. Obviously, we've got this 30,000 level to consider as well, which is a big psychological level. And that seems to be doing a job at the moment. Price action has stalled, and we are, I believe, likely to see some buyers at least have a bit of a go around about this level, because they'll be interested in trying to defend this 30,000 level. Below that, we do have a 61.8% Fibonacci level at 27,175, and this is in place from these lows back here in March last year to the highs that we posted in April. So a 61.8% Fibonacci retracement to that level is at 27,175. So for me, that's quite an interesting level. If this level gives way, we've got a big zone of support here to try and defend. If 27,175 gives way, then we're starting to look for lower levels around about 20,000. So 19,979 is a level that I've pinpointed on this chart. Below that, we have a 78.6% Fibonacci level at 16,920. Now, why this level I think is important, the 19,797, of course, it's just below that key 20,000 level, which would again be another big psychological zone of potential support. But if we go back to here in December 2017, this was sort of the last time we saw this big bull run up in Bitcoin before it dropped back. Obviously, we saw the price languish below those levels for some time before then, this latest bull run that we saw that started back in March last year. So this could act as support on any pullback. And as you see here, there's a bit of cluster of resistance where it tried to overcome this level previously before this big break to the upside in December last year. So for me, If this level can't hold 27,000, if we can't see the bulls defend that, then we'll be looking for a potential drop down over the medium term towards that 19,800 level. So technically, the outlook doesn't look particularly appealing at the moment for Bitcoin, I would say. But and obviously this is having a knock-on effect on all the other cryptocurrencies as well. Be careful if you're trading. Clearly from a risk-reward perspective, I understand, if you want to buy Bitcoin around about this zone, it's probably, as good a chance as any. But be aware, if these levels can't be sustained, if the support doesn't hold, then we could see a gradual slide lower in the price of Bitcoin. So I think from a speculative point of view, having a go between this kind of 27,200 to 30,000 level is probably worth a shot, but you've got to employ risk management on these trades, because if those levels give way, then we could see them slide quite quickly to the downside. So good luck if you're trading. That's my roundup on Bitcoin for this week. We'll be back next week with an update, and until then, trade safe. Goodbye.